Hello, everyone. Welcome to FinanceOlogy 101. Class is now in session. The information provided during this podcast is just that, information. You will need to do further research to address your specific situation. Enjoy the session. Good evening, everyone, and welcome to another session of Gifted Generations Presents FinanceOlogy 101. I'm one of your hosts, Robin Seegers, and my husband, Elroy Seegers, is another host. And once again, we have our wonderful guest speaker for this hour, Tina Smith. Tina Smith
Yes,
is
yes.
Tina Smith is the president of the Financial T Coaching and Consulting Firm. She's a financial coach, she's a mentor, she's a mom, she's active in her church, and she's the author of It's Your Turn, Walk in Your Financial Purpose. Hello, Tina.
Is she
Yep,
there?
yep, yep.
Okay. There
Hey,
she go.
I'm
There she
excited
go.
about today. I really am.
There she go.
yeah. How you doing? Everything going good, right? Well, while she's getting herself um reconnected. This session is going to be about life insurance.
Yep.
And Tina's going to speak to us about life insurance and definitely the importance of having life insurance, especially with
Yep.
COVID and people are
Yep.
dying and a lot
Getting
of it
sick.
is
All that stuff. Yeah.
yeah,
Yep.
yeah,
Yep.
and
One of
and
the biggest things I've seen, Robin, as far as life insurance go, a lot of people don't get life insurance. They rely on their current job to have life insurance. You're like, hey, I got insurance. I'm my job, life insurance. But what happens if you switch jobs? You get fired. You know, they
right, right,
there's different kind of life insurance. They got term, they got a whole life. Outside your company that you're working with.
right,
Things go on. You know, I hear different things as far as life insurance go. You should have enough money for life insurance for the burial, to pay off the house, maybe. Those kind of things because there's different kinds of life insurance. Fortunate enough that we have Tina on board. That if she can manage to get back on board, she can give us some pointers and tips when it comes to things you should do when you think about life insurance. Um,
right. And think about it, the pandemic is opening up everyone's eyes because if you like you said, if you're relying on your job for insurance, in the pandemic you lost your job, then you're without life insurance.
yeah,
And also you see a lot of people, I hear about GoFundMe pages left and right to
yeah,
pay for funeral costs and to pay to help the family make up the income of their lost loved one. And
right,
I just remember our pastor, Dr. Jeffrey Chapman of Raleigh North Christian Center, saying we have to consider our families if something happened to us. What's going to happen to my family if something happened to the mom or the dad? And a lot of people don't think about that. And then I'm hearing all these stories about firefighters and first responders losing their lives to COVID, and they're having to have GoFundMe pages
yeah.
to to support the funeral or the family. You
Yeah.
know, it's just so sad. It is just so sad. So life insurance is definitely important, and we have to figure out a way to make sure you have that coverage
Yeah.
somehow.
It seems like as you get older, it becomes more expensive. That's just my take on it. I'm not a not a life insurance expertise, so hopefully Tina can get on and give us some pointers and tips about life insurance and the pros and cons of things. So right now we're just speaking from personal experience. When we was younger, Robert and I, we decided to get a life insurance when our kids. What's it called? It's like the baby insurance, or as you grow, you can continue to increase the amount. Eventually we're gonna hand it over to them, and they can continue paying for it because that's
Right.
something that they need. Robin got insurance. I got insurance. My boys got insurance outside our business. So let me see here.
Yeah, you have to do that. I just remember back in the day when the insurance guy used to come knock on your door, and you had these coupon books, and you paid him your monthly premium. It came by once a month, and you paid your monthly premium, and it's like, oh
Yeah,
my goodness, And back then it was kind of funny, but now, I wonder if that's something we need to go back to, because he reminded you once a month because he came knocking on your door for your premium.
yep,
So
yep. I
it's
used to
like,
remember that guy.
wow.
I used to remember that
Mm-hmm.
guy. He used to always come around in a big brown suitcase. I mean, big brown satchel case, and I
Yeah,
was always pay for it on the spot. So yeah, that was back in the days. Nothing like what we have today in today's technology. You just go online and pay for it or write a check. But he
right,
came
right,
around,
right,
So it was
right.
funny because that's where I actually first started seeing and knowing about life insurance is because those guys came
Mm-hmm.
around.
Yep.
If not for that, I don't think I would have known about it because a lot of people don't talk about life insurance. They talk about
Right.
vacation and stuff. What you're gonna do with this and what you're gonna do, what you're gonna buy. But they don't talk about life insurance. But back in the day when we was growing up in the hood, that man was coming around that thing. I just sit down and I said, "Mom, what you doing? I'm paying for life insurance. How much is it?" That was my first experience ever knowing
Mm-hmm.
about life insurance.
Life
And
insurance.
believe it or
Yep.
not, that stuck with me for a very long time.
Hey guys.
You
Yes.
know,
Yes.
hey, hey
Hey.
man,
Hey, you can hear me. Okay, great.
yeah,
Yeah.
yeah.
Yeah. Yeah.
Whew.
We was just reminiscing about life insurance, but
Oh,
we're
I
gonna go
heard
back and.
everything, but I heard everything you said, but I'm all chiming in and nothing's happening. Thank you for your patience. I don't know what happened with the app, but we good now. So thank you for your guidance behind the scenes. You guys are great.
Oh,
No
you're
problem, no
welcome. You're
problem, no
welcome.
problem, no problem.
But we're gonna just rewind it for a second and let you introduce yourself to the audience and give them all
Thank
your
you.
information and everything.
Hey, everybody. You know, it's your girl, the Financial T, Tina Smith. You can always check out our website, thefinancialt.org. That is TheFinancialt.org. I'm always excited to hear from you. I thank you guys for having me on your podcast yet again. So I'm sure your listeners already know enough about me, but I know they want to get more into about this life insurance thing because it is some people make it so complex, and I'm so
Yeah.
honored to know enough about it and is licensed, and I'm licensed in it. I don't sell it. I'm licensed so I can provide a great educational opportunity. And that way, folks don't feel threatened like, okay, here's another product she's going to throw at us. No, this is
I get it.
all educational. So
I get
I'm
it.
Right.
super
I get it.
excited to be with you all about this.
That's good. You're not selling anything. You're just trying to help promote someone's wisdom and knowledge of what it's about and how you should go about it. I like that approach because you're trying to teach people about it, not trying to sell them
Yes.
something. I like that. I can
No,
appreciate that. I
no.
appreciate that.
And there's nothing wrong with, I don't want to make it sound bad to those insurance agents, that are out there. I'm telling you, insurance agents have a very tough job. And the unfortunate thing is they want to educate, but there's people, across the table from them like, what's in it for you? But I believe in
Right.
sessions like this, the person who is interested in getting life insurance, if they have enough education about it, by the time they get to the insurance agent that's quote unquote trying to sell them, they're actually saying, no, I know what I want and I know why. Now, let's talk about how we can make this happen. So I hope
Right.
this is what happens out of the end of our session today.
Yeah, because if you notice here lately, and I don't know if it's because of the pandemic, but the commercials about the life insurance is heavy in heavy rotation. It's like, oh
Yeah.
my goodness, they talking about it a lot, and I'm wondering if it's because of the pandemic that they're talking about it a lot.
Well, I think what it is that it's so forefront. I mean, every time you turn on the news, if it's not dominating, it is one of the dominating topics is the pandemic. And so
Mm-hmm.
now that quote unquote, we have your attention, this is an opportunity for us to say, okay, now, if you don't have life insurance, this is why it's important. And, we don't want any family members to be caught off guard when things happen. One thing I tell you what we all have in common, everybody on this earth will die in some way, shape, or form, either through
Right.
rapture, It's through gonna, while we're here on earth, it's gonna happen. And so, why not allow the loved ones that we have behind, those who are going to survive us, why not have them set up in a way where they are better off? I like to use the Hilton family here. There are members of the Hilton family we would have never even known about. They're not working. They're not doing anything. They are enjoying their inheritance. And a lot of that inheritance is through life insurance. We have a prior president. The inheritance is life insurance. Let me tell you why the wealthy have life insurance as inheritance. It is a tax-free benefit to the beneficiary. You may think investments are incredible, and investments are. I stand on investments. That's why I'm an investment broker. But I know that if I put $500 in my investments every month, it's going to take years for me to get to $1 million. Years.
Mm-hmm.
But if I buy a life insurance policy for $1 million, my first month's premium checks, let's say I'm applying for life insurance and I decide to go ahead and write the first month's premium with that application.
Mm-hmm.
The minute I slide my check over to the agent that's selling me said insurance, I now have $1 million worth of insurance. So if anything happens to me, my beneficiary gets $1 million if I walk out and get hit by a bus, because I have secured that with my application and first month's premium. So if they were going to approve my insurance policy, they would backdate it to the date I sent that check in, if that makes sense.
Okay.
Mm-hmm.
So tell the people the different types of insurance and any key points that they need to know about insurance.
Okay. Now, being licensed, there are going to be some things that I say that are different from financial entertainers. You and I both know financial entertainers. They're going to tell you what the public thinks that they want to hear, and then there you go, and then badmouth the other side. And that's not what I'm here to do. I'm here to provide an objective version of education on both sides of the aisle, if you should say. So there are two primary types of life insurance. The first primary type is temporary. That is like term insurance, or that is like what you have on your job. Or you was talking about, what happens if you lose your job, if you switch jobs in the meantime, you don't have cover. You're right. If you don't have life insurance outside your job, if you're between jobs or whatever, if you lost it or you quit or whatever, you don't have life insurance anymore. And what people don't understand is they assume that their life insurance at their job will last them forever. And that could not be further from the truth. Now, are there some instances where you could take life insurance with you? Absolutely. There are a lot of opportunities for you to change your employer-sponsored life insurance policy to now your own. 9 times out of 10, you will pay more to continue that policy. That's an aside, but that's temporary, to where you're going to either have term or you're going to have your employer's life insurance. They're under temporary conditions, let's say. Then you have your permanent. There's a couple of different types of permanent as well. There's whole life, and then there's also universal life. So each one is designed to last you, like it says, your whole life. So the key is that you need to make sure those premiums are paid. Sometimes there's cash value there. Sometimes it's not really robust. It just depends on, the kind that you want and how you plan on using said cash value. If cash value was not a big thing for you, then, maybe universal life might be better. It's less expensive than the whole life, not a lot of robust cash value, but yet still designed to last you until a particular age in your life. And so with that being said, you want to select something that is long enough, or that age is late enough to where you hope to really have passed away by then. So in that situation, I like maybe age 100, 121, 126, the probability of, us outlasting that is very low. So, but those are the two types of insurance. Now, when you talk temporary insurance, the term is what you could buy, is what you hear on the commercials and everything. And this is one of my favorite commercials. And if you don't have a trained ear, you won't really know what's really going on. So we found Bob a $500,000 policy, and he only pays, $41.06 a month. What they said that you didn't hear is that it was a 10-year term. So what that means is he's insured for $500,000 at $41.06 for 10 years. If he outlives that 10 years, that's when things change.
Oh, okay. So he will have to start over again and buy another policy.
Potentially. There's also there might be some other opportunities where he could, the insurance company, about 2 months out or so, they'll send Rob a letter and say, okay, Rob, now this premium was cute for the last 10 years. You're no longer 10 years younger than you were. So now you're 10 years older. Now this is about to be your premium. And if Rob doesn't like said premium, yes, he may want to consider reapplying elsewhere. But you don't want to cancel the insurance until you've gotten the approval from the new insurance company. But now you're 10 years older. Now you might have other issues. You might weigh more. The probability of you being in better health than you were 10 years ago isn't as high. I mean, there's a lot of things that could happen in 10 years. You might have blood pressure, diabetes, and these are just things that happen naturally as we get older. So, I think that both types are important. We just have to know when and how to use both types. I'm sorry, Robin, you were going to ask me a question.
So if he's old, so older people, would term be more useful to the older generation than for younger generation? Is term better for them? Would you say?
That's a great question, but it's loaded. Here's why that's loaded. If you're 70 years or older, there's not a term company, not a traditional term company. There are some companies out there that may sell you what do they call it? End of life or something like that. They'll sell you that. And that's not a temporary insurance either. So the end of life, the colonial pins and stuff, that's not term insurance either, but that's an aside. So what happens is normally term insurance companies won't sell anyone 70 years or older, in some cases 65, because now it's way too expensive. And to be frank, they're closer to death. So if I'm 75 years old and pay 2 months premium, if I pass away, now I'll get all this money and I only paid into it 2 months worth. So the insurance companies have to look at that as well.
Wow. Okay.
And statistics show, I'm a numbers girl. Statistics show that only 3% of all term policies actually pay out, because most people are outliving said policy. So let's go back to Rob. Let's say Rob, was 35, now he's 45, and, he continues to do this 10-year thing, but look at how many policies he did. If he passes away at 95, look how many policies he had from 35 to 65 to 95. He had 6 policies.
Wow.
So he's outlived 6 of his policies. And so, only, a very small percentage that's actually going to get paid out if he passes away on that last set of 10 years, if that makes sense.
Yeah.
Wow. So you could have, you could pay in all those years and then outlive them and then be left with nothing.
That's correct, especially in a temporary sense. So, and I think what happens is the premium is so attractive initially, you don't think, hey, I might actually outlive this bad boy. And when if you're not dead in 3, 2, 1, you've, not that policy is not being cashed out per se because you didn't die. So now you have to figure out, what to do.
What's the longest term life you've seen available? 5, 10 years, 20 years, 30 years, 40 years? What's the
On the
lowest you seen
market,
available?
I've seen 30.
Okay.
30.
Yeah.
Okay.
And then what happens is a lot of times after that 30-year stint happens, some companies will give you what's called an annual renewable term. So here's what that means. I'm 46 now. Let's say I get a 30-year policy, I'll be 76 after that. After that, they'll say, okay, Tina, after now that you're 76, at 77, you're going to pay now a higher premium. Oh, here's your 78. You're paying a higher premium than you were last year. And every year the premium goes up because it's like a new 1-year policy.
Okay. Wow.
So, and you'll find that a lot of people in their senior years don't have insurance because the premiums were really, really cheap, 30, 40, 50 years ago. And now it's too expensive to have. So you'll find, unfortunately, people that don't have insurance anymore because they couldn't afford to keep up the temporary thing anymore, if that makes sense.
Yeah. That's
So
sad.
yeah, it is sad and it's heartbreaking. And then that's why you'll hear some of the older folks that say, hey, let me give, maybe AARP or Colonial Penn. And I'm not picking on those agencies anywhere, any way, shape, or form. They're great agencies. My goal is to educate you when you're 20, 30, 40 to get the appropriate types of insurance that you need. So when you're 80 and 90, you already have that secured. And you do that by getting some type of permanent insurance. So here, I tell people all the time, I've got both types. I don't down one type or another at all because both are used. If both are used properly, they'll be the bomb for you. So here's why I have temporary insurance. I've got temporary insurance. I got it, 2013, 14 maybe. So we said, okay, we built this house. We've had this house for 2-3 years. This is our forever home. We're going to go ahead and stay here. We decided, my husband and I both decided to get insurance policies for the time length that was left on our loan and our mortgage rather, and for the amount that we owed on our mortgage at that time. Does that make sense?
Yes.
So if either one of us passed away during the time we was paying our loan off, our mortgage rather off, then the survivor's spouse won't have to worry about, oh my goodness, how am I going to pay this car? I mean, how am I going to pay this house note? Well,
Right.
here comes this, this check lump sum, and he and I both knew what that amount was for. So we would go to, our mortgage company, pay it off, and be clean, if you will, of that particular mortgage.
Right.
Which works really good because as the years go by, 10 years into a 3-year mortgage, whatever, you actually owe less, so you got a little bit of a profit margin there too.
And so true. And so true. And also, it might not be, and so of course going in, this was a great idea to have, enough money to pay the house off. But in some cases, it doesn't make sense because from a tax perspective, if you pay your mortgage off, now you can't itemize anymore. You know what I mean? So there's 2 ways to look at it. So okay, wait, I can't itemize no more. How does this affect me? So, there's always something to look at just to make sure that, not only now and later, like the candy now and laters, but, you want to make sure you're good to go on now and later.
Now I have a question because now correct me if I'm misunderstanding this. I thought that if I had a policy and I went out, say I have a universal policy and I wanted to go out and buy a term policy, and I did purchase that term policy, I could not cancel my universal policy for 2 years because that's that period of, am I saying this right? The 2-year period of the term life actually will pay out. Because if I cancel the universal, then I won't have any insurance, even though I'm paying for term, because there's some 2-year lag period. Is that correct, or am I saying it wrong?
Okay. I hope the explanation I'm about to give will help you.
Okay.
Normally, the 2-year situation is in the situation of suicide.
Okay.
So if I go out today and buy a policy and I commit suicide, in 3 months, that policy might not pay out because I'm within that 2-year period. The intent is for me not to go buy insurance so I can go kill myself and have my family be okay.
Right.
Because
Okay.
maybe I did something I wasn't supposed to do, or, we're that much in debt, or, we're about to go to bankruptcy. Let me go ahead and take care of this by getting some life insurance. So that keeps
Okay.
that, that situation out. Does that make sense?
Yeah. Yeah.
Right.
Okay.
So there's now after the 2 years and I've committed suicide, then the policy normally does pay out, but that's normally where the 2-year probationary period, let's say, counts. But if I passed away not at my own hand, there's no time frame in which my policy is activated that it wouldn't pay out. Does that make sense?
Okay.
Now,
Yes.
like, in situations of overdose and things like that, there's going to be an investigative process on what happened,
Okay.
So, but if it's proven that, I died of either natural causes or I was at the hospital, I got hit by a car, whatever, and it wasn't of my own hand, then if it comes out that that I was killed or that I died of, natural causes, then that's when the insurance company won't have any issues. And normally when you have a death certificate, the death certificate will say what the cause of my death was. And they're going to do an autopsy and they'll be able to figure that out. But normally what I've seen in my experience is that the death certificate will determine the how I passed away, and then the insurance company will follow suit.
Okay. Okay. Because I always heard that 2 year you can't drop your policy and pick up a new one because it takes them 2 years, and it's like,
No,
okay. Okay.
not at all. Not at all.
Okay.
I hope I dispelled that fear. No. You can cancel any policy you want at any time. There might be a process to do it, or there might be, hey, you haven't gotten any cash value, or if you cancel now, you won't get X, Y, and Z benefit. And if you feel like canceling is appropriate for you, then you can go ahead and push through. But I would never recommend canceling an insurance policy until you've applied for another one and gotten the approval for that and gotten the new policy in your hand. Then you can cancel whenever you're ready.
Okay. Okay.
Mm-hmm.
All right. All right. All right.
I hope that helps.
Oh, it did, because that's what I was always in my mind. I don't know who said it or where I heard it from, but that definitely was on my mind. That's how it worked.
Mm-mm.
So there's is there such a thing as a policy for your? I think there's a policy for your mortgage.
Yes,
That
there is.
mo-
Yep,
okay.
there is. And normally what happens is the mortgage company will sell you an insurance policy for however long.
Okay.
And what happens with that particular, what I've seen, those policies are the death benefit reduces as your mortgage reduces.
Okay.
So if this year you owe $250,000 and next year you owe $248,000, your death benefit on that insurance just for your house is now from $250 to $248. Does that make sense?
Yes. Yes.
So it kind of goes in line with the reduction of your mortgage. That's how much it'll pay off. So the whole point is just to pay the mortgage off. That's it. But you normally buy that through the insurance. Through the mortgage company. They'll have a partner that will offer that kind of policy for you.
But their premium won't change. It won't go down. It's going to stay the same.
No. Your benefit will reduce, but that premium sure enough won't reduce. Yeah. That's never happening.
So for people that's all the COVID and the death and stuff, and for young people, speak to them about the importance of getting the policy and where they should start. If they should just go ahead and start with a permanent or a temporary, because I know a lot of young people just don't think. I guess that's because that's how God made us, to not think that we're ever going to die. But like you said, we all going to die, but young people don't think about that. But this is something they definitely need to think about with COVID and everything that's happening. Speak to the young audience that need to hear the importance of having a policy and what they should start with.
Hey,
That's
you speaking to the young and the old, because there are a lot of old
Well, yeah.
people that don't even follow that rule. So speak to the people. Speak to the people. Speak to your audience. Let's just ain't no young and old. We all suffer from lack of knowledge, and we do make the same
Well,
mistakes.
that's
So
true.
yeah,
That's
speak
that
to
true.
the
is
people.
true.
Speak to the
So so Robin, I love that question because you're right. Young folks think they're invincible. I thought I was invincible. I didn't think I was ever going to have ailments or anything like that. And I'm 46 now. Those ailments are here whether I like it or not. So I want to speak to young people specifically, and anybody who is not maybe as young, share this information with the young people in your life. Because I want to tell you my story. And, I think by sharing my story, it will empower, educate, and inspire other young people to do exactly what I've already done. So I'm 25 years old. I'm making $19,000 a year. Yes, I said 19. $19,000 a year. And I hire my first financial coach. I hired my first financial coach because I knew I had to do something else because this $19,000 a year was not hidden at all. So I figured I needed to, and I was single, and I didn't have any responsibilities other than, my phone, but I've hardly had any responsibilities. So I needed to know how to make this 19,000 flip for me to do better. So I hired my first financial coach. And one of the things that Mr. Beck, God rest his soul, showed me was the importance of getting life insurance. I had a job, so I had that benefit, but he knew that there was going to be one day I was not going to have that job anymore. I mean, everybody, stops working, hook, crook, voluntary, involuntary, whatever. There's all going to be a point where we're going to find another job or transition to something else or just stop working altogether. So he said, okay, look, you got this policy, now with your job, but how long you plan on being here? I'm like, look, sir, I'm out, as soon as they pay me my pension, I'm out of here. So he says, okay, do you think that you'll need life insurance once you leave your job? I'm like, well, I guess, I'm single. I guess. But that older man showed me something that was so important. He casted vision in my life that there was going to be one day I was going to, get married, have children. How did I want to leave my future family behind? And I could make a decision today on how I was going to leave them behind in my future. So I was like, okay, so how my checking and savings is working right now, I only got so much. So he says, okay, yeah, I got you, no problem. Let's start with something that you can afford. This man started me with a $25,000 whole life policy. I might have paid it was $50,000, and I can increase sporadically over time, $25,000. So a $50,000 policy for a 25-year-old female, with no ailments, I was probably paying like $30. I was like, deal. So he let me know that there was going to be cash value that grew along with it. He let me know that as long as I kept my premiums up, I would have the policy until I passed away. It would not expire before I passed away unless I made changes. He also put on that original policy that without extra medical exams, height, weight, blood pressure, all that, I didn't have to answer any more medical questions at age 25, 31, 34, 37, or 40. And, if I met the conditions to continue, I could do it again at 43, 46, and 49. I'm 46. My policy should be in the mail any day now because I just extended. I just got a new policy because of that thing that he did for me back in 2000. Think about this.
Wow.
In 2000, in year 2000, so Y2K, I'm single, no kids. I'm working my little job. I'm not very, prestigious in my job at that time. I'm young. Now I'm 46. So this is 21 years later. And every 3 years from that moment in 2000, I've been able to increase my my insurance. Now I get new policies, but I'm not answering any more questions. I now have sciatica. I got flat feet now. I got all kinds of stuff, that if I'm answering questions about my health, some of these answers are yes. And with that being said, that will also increase my my premium because I'm more sickly than the normal 46-year-old, if you will. So with that being said, I was able to lock in my pristine health at 25. And I'm not answering any questions at 46 about none of the stuff that I got in my medical records. Make sense? So what he did was set me up for my future that I had no idea. So at the present time, I think I have $675,000 of whole life insurance. Whole life, because I've been able to increase. Now, once me and my husband got married, we had a kid. It's before we bought the house, but our financial coach at the time, obviously there's things in my life that had changed. And so she was like, hey, now that you got Trey, now that you guys might want to consider more insurance. And we're like, shoot, we can afford it. Let's do it. And so we did. And so we were like in our early 30s then. So we locked that in because we were super young. We were super healthy. Now we're in our 40s and please, we can't even think about applying for life insurance. Thank God that when I was 25 and, when I was 28 and in my younger 30s, I applied for insurance back then because I wouldn't even want to think about how much I got to pay for it today. Because again, I've got issues now that I have to say yes to that will increase, my premium because I'm less healthy than a normal 46-year-old female. And, so I always tell young people, start now. I don't care how much you can afford as much as you can. And if it's just $50 worth, afford it. Just go ahead and do it. Lock that in. Lock in where you can get more insurance every 3 years without having to answer more medical questions. The only question I had to tell my financial coach today, and she's just solely my insurance agent. Obviously, I'm my own financial coach. But, my insurance agent now, she just says, hey, you smoking? No? Okay, check. Policy will be in the mail. Give me about 3 weeks. No problem. It's that simple.
Wow. Yeah. And that goes for parents that have planning to have little ones or they already have little ones.
Don't even get me started.
Policy.
Don't even get me started on buying insurance for your kids. Because So my son's 8. He's 15 today, but he was 8 at the time. My husband and I were talking and we were like, I was seeing some of my clients and I was like, these people got insurance on their kids. Really? Okay. I came home, talked to my husband. He was like, really? I said, yeah, baby, think about this. Remember when we were 25 and we got our own, insurance policies? He was like, yeah, I said, think about our son when he turns 22, 25, 28, 31, 34, 37, and 40. He has 7 opportunities to get more life insurance without him asking one more medical question. What type of health is our 8-year-old in? He's in pristine health at 8. He's 8, right?
Yeah.
So, I think our first policy, we might have paid. I think we're still paying on it, obviously. I want to say it's $28.13. But by the time my son turns 50, if he does all those increases, my son will have over $1 million worth of whole life insurance that he can pass to his kids. That's where we're talking about legacy and stuff like that. It starts now. It don't start when they're 20. It starts when they're young. I've got clients who, I've been telling about, life insurance. They say, yeah, when our baby is born, we're going ahead and putting life insurance on her. Sure enough, and that starts, at birth. All you're doing is, answering medical questions about a newborn. How healthy is a newborn typically? You're checking nose on everything. given back the application with the first month's premium, the baby's covered for life.
Yeah.
Now you don't expect the child. I never expect my son to pass away before me. Never.
Right.
But what I do expect is for him to be an old great granddad. And when he passes away, that his family for generations to come is set. And every dime of that is tax-free. The government never sees a penny of it if you do it right.
Yeah, because we did our sons like that. When they both were born, we start in like you said, every 3 years or so, we get the opportunity to increase it.
Yeah.
And now they're 30 and 26, and every opportunity we get, we increase it. We increase
Yep.
it. And it's like, so it's a no-brainer that at that age, when they're young, go ahead and start, because then you can always have that
Yes.
figured into your financial budget,
Yes.
and you're covered.
Ooh, speaking of which, let me talk to the single people real quick. I got to get these folks. Single people, go ahead and get your insurance together now. When you get boo and stuff and they ain't filling your budget, you have saved yourself from years down the road of anguish. Because if that person loves and respects what you're trying to do for your financial hustle, they're going to be okay with hustling alongside you. That's what happened with me and my husband. I had already had my financial coach. When I met him, he was going to school. He had his job too, and he was going to school at night. And there was some conversations that came up. We were trying to learn each other before we started dating. And he was telling me about, his financial agent. I said, oh, for real? Okay. Now we talking. And so he understood that, finances were a top thing. And, my husband will tell you back then, and he still will today, statistics show that 50% of all marriages end because of financial problems. Oh, really? So he's throwing these figures at me, when we're trying to learn to see if we want to date and eventually get married. But I say that to say he and I both saw the value of making room in our budget for investments, for life insurance, for savings. We both saw that. So it weeded out a lot of, of the buffoonery, if you will, and candidates that wanted to be my man. I was able to see the cream of the crop based on the financial conversation, because all the guys that, kind of tried to go to the top, they weren't talking the same language. And so if I said, oh, life insurance, okay, maybe you ain't the one. So single people, if this is important to you and you get you make room in your budget for this, don't let anybody talk you off the ledge. You know why you're doing this. You want somebody to come alongside you and work through all of that, because now, so this was my husband and I, we're in our 40s now, but we got married. We were dating, and then 2 years later, got married. So we were in, our mid 20s, when we got married. And now, 20 years later, we want for nothing, but we had the foundation set back then. And was it a sacrifice? Absolutely. Could we do everything that we want to do and drive the newest car and live in the best house and No, but we do now.
Right.
So,
Right.
single people, especially if you're young, have somebody come alongside you and work with you. Legacy is important. Voice that early on so they know what it's about to be, because you're not going to come over here and start spending up everybody's money when this is too important.
Right. And that's something that's funny you say that, because Elroy, we were talking about this yesterday, that it is so important that when you're single and you're out there dating, that those questions, financial
Yes.
questions, should be asked. And
Mm-hmm.
he always says that we get caught up on how good he look and how good he smell and
No,
all of that.
honey. I need
And it's like,
to know what your banking schedule like. For real, for real.
Mm-hmm.
Listen, what's that credit score?
Mm-hmm.
Okay, now we working with
See,
something.
see what
Because
I tell you, Robin? I
what we
told you.
not gonna do, is be married. Now we want to go try to buy the house, and
I told you.
and the mortgage lender looking at him crazy, because he looking at me because I know my credit score tight. He looking at him crazy. And I'm
I
like, what?
told you.
What's the problem? Shouldn't be no
Look,
issues. Nah,
that is
dog,
funny. I was telling Rob, I said,
Uh-huh.
girls, you say, hey, yo, young man, what's your debt ratio?
Listen,
What's
I
your
need
debt
to know.
like, what's that? Okay, next.
Not next.
Can you give me the three credit bureaus? John Smith, Mary, and me.
No.
Next. What's
Look,
your FICO score? Who is FICO? Your sister? Next.
listen. Was that song back in the day? We can't even kick it no more. No.
Look,
No more shopping
that is
sprees.
funny.
No more VIPs. No more late. No.
Well, the problem is we don't like
No.
to have those conversations. Life insurance is really death insurance. We don't
Really?
want to have those conversations. Same thing about your will and the funeral and stuff. These are difficult
Telling you.
conversations, but we tend to avoid them. But they are critical to your legacy and living
Absolutely.
beyond someone's passing.
So let me dispel a myth right here, and I thank you for sharing that. But let me dispel a myth right here. The myth is life insurance is only for the people that are going to be left behind, and I'm going to be dead. Let me tell you, bust that myth right now. There's 2 reasons why, and I'll tell you my story. Number 1 reason that is untrue is because the cash value that builds in whole life policies could be used for whatever you choose. You can borrow against your cash value. So if you're trying to go to Bank X or Credit Union Z and you have great credit and say, hey, I'd like to borrow $30,000. Oh, for what? Oh, I want to buy an investment property. Oh, really? Here's your 2-digit interest rate. Oh, excuse me? For that credit score? You guys are crazy. Go to your insurance company. Hey, I want to borrow against my cash value. Oh, really? For what? Investment property. We didn't care what you wanted for. We were just asking, trying to be friendly. Your interest rate is already 6.5 or 8. Already. No credit check. Nothing. That money is sent to you. And as long as you pay the as long as you continue to pay the premiums, as long as you pay the interest, and if you want to pay the loan back, you can, but you must pay the interest every year. Why? Reason number 1 is because if you don't pay that interest back every year, now it's income. Now you have to go back and correct your IRS because the IRS got a flag saying, oh, they got income in 2017. Let's go back and look. Yes, they will do that to you. So that's one reason. The second thing is you don't have to pay the loan itself back if you don't want to. It'll just be subtracted from the death benefit. So when you die, minus the $30,000 that you borrowed and you just paid the interest back or whatever, and then your family gets that left. Totally up to you, but you got to pay the interest charges. So we took that 30 grand and we put that as a down payment on an investment property that we cleared over 70 grand for. I would use that 30 grand. I would use that 30 grand again. So that's Mythbuster number 1. The Mythbuster number 2, or part B to that, is even in temporary insurance, even in term insurance, you can get bells and whistles on your term insurance that says if you're in chronic or critical conditions or in terminal illness, you can get some of that money up front to help for your care. And so there could be like a 75 or 80% maximum. Say your policy is $100,000. Maybe you could use $75,000 or up to $80,000 to help, ease, your experience. Like, if you have terminal illness, maybe we can ease, how you go versus, this pain and suffering that you may have. Maybe there's some medication or maybe there's a nursing home or hospice or something that can help ease your end of life. That could be paid to your family, to you and your family to help you while you're still living. And then your family gets the remainder when you pass away. So Mythbuster, life insurance is only for the people you leave behind. Absolutely not. In both cases, in temporary and permanent, you can use your insurance while you're living.
Wow. Did not know that. Mm-hmm. Yeah, did not know that.
Well, we've done the whole life before, Robin.
Yeah, we have whole life. Yeah.
Yeah, we
have, I think we have universal as well.
Mm-hmm.
Yeah.
And both are great. Both are great.
Yeah.
Yep.
Wow.
Just
So,
manage the expectation. Just manage the expectation. In universal life, I always tell people go back and look at the age in which it ends. If it's 60 or 80 or something, see if you can make some changes to elongate that more to the 100, 120s or something like that. So I always tell people that have universal life, just go back and double check the age rather, that it either ends or your premiums start going up. Just go back and double check that. And if you already know what that is, then great. Then we're cooking with gas. But if not, talk with your agent and make some changes just in case, because what I never want to happen is somebody that says, oh, I've got this, policy, and then they pass away and didn't realize that policy actually stopped at age 65. You just didn't know it.
oh, but they would continue taking your money if you still paying on it and all of that?
Not necessarily. So it depends upon that person reaching back out to you and saying, okay, now you're turning 65, this is when it ends, so there has to be a communication of how to make sure that we continue. Yeah, there's got to be communication. But you don't want to be 65 and be like, hold up, I got what? Wait, huh? Ends? Right. Excuse me? You don't want to do that. You want to know in advance. That way you can manage your expectations going, from now on.
Let's see. So you got my mind turning. It's like, okay, I need to make an appointment with my insurance people.
Yeah,
and start checking on this.
There should be an illustration in your policy that says, okay, here are your premiums, and these are the years your premiums will stop at this age. There should be an illustration in your policy, or illustration that came with your policy. Even if it's not in it, one should have came with it, and so it could show you exactly what your premiums are on an annual basis and when the premiums will stop because you've reached a particular age. Mm-hmm.
Okay, I'll look that up.
Look for the illustration. Yeah.
Wow.
See, you just want to make sure that you're all good to go. Yeah. I've shocked some people on some insurance policies reviews. I'm like, do you see? Oh my God. Let's make some changes. Mm-hmm. Okay. And it's not that the agent was necessarily at fault. It's just that you probably just didn't understand it at the time, and it's okay. It's just now that we know better, we got to do better.
Okay. Mm-hmm. Yes. Very informative. So I have some homework to do. Because I don't want to be caught out there. Nobody's doing no GoFundMe pages for me.
No.
Wow.
Okay, well, anybody have any questions that's on the line or anything?
No, I didn't see any questions. Everybody just listening in.
Okay, well, good. Hey, everybody. I hope you taking notes and getting this good sweet tea I'm spilling.
Yeah, because it's important. So is there anything else you think we should know? I think I've asked everything that I had. Roy, did you have any other questions?
No, y'all covered a lot, and we talked a little bit before she got hooked back on the line, which was good because we had a conversation, and then she came back and, helped clean it up some. So it was a great flow how you and I talked about it, and then she came back and, confirmed or cleaned up what we were talking about. So I actually liked the way that she actually got dropped off. You and I we actually talked about what we knew, and she came back and said, oh, okay, we will continue y'all's conversation with this conversation. So it was a nice flow to bring her back into it. So different.
Okay, great.
But I like the way it flowed tonight.
I'm glad. Okay, excellent.
Is there anything else you think we need to know, Tina?
You can buy my book. Okay, go ahead.
So, is there a website that lists all the agents, like different companies, State Farm, all that good stuff? Is there one place that lists everything, or they just start Googling it?
I always recommend you find a local agent that you can sit across the table with, of course, with your masks on these days. But sit across that way, that person can look you in your face and explain to you exactly what the benefits are, any pros, cons. That way you walk away absolutely educated and you can make educated decisions. So I always recommend finding somebody local. I don't care if it's your State Farm agent. I don't care if it's one of the independent agents, that can give you some education, and then look at a whole bunch of different kinds of, companies for you. So those are like agent brokers. You don't have to pigeonhole yourself into one company. You can have, different companies fight for your business, if you will. And as
Okay.
long as the quality is there, lowest premium wins as long as the quality is equal. But yeah, I don't recommend, going online. I recommend you sitting and talking with someone face to face, even Zoom to Zoom, but
Okay.
at least, that person can, look at you and be like, hey, this is the deal. This is what you need. This is, what options are available to you. What say you, and have that
Right.
conversation.
Right. And it's important to have that rapport with your agent, because we
Yes.
had an agent that we had a good rapport with, and we could come and, talk to her about anything that was happening in our lives, and she helped us adjust our policies based on that. So
Mm-hmm. Mm-hmm.
definitely somebody you trust and have a good rapport with. Yeah.
Absolutely.
Yeah.
Absolutely.
Yeah.
100%. But yeah, I hope that, I was able to, help individuals that, have, life insurance or wondered about how it works and things. So that way you can go to your local agent and say, hey, this is what I know about permanent. This is what I know about temporary. This is how much I'm thinking. This is how much premium I'm thinking about. Can you help me, meet my goals? And that person on the other side of the table will be happy to help you meet, those goals. But at least you're walking in educated, not blindsided.
Right. Right. Well, once again, great conversation. Thank you
Yes.
so much. And tell the people how they can get in contact with you, or your social media handles and everything.
Absolutely. So if you know me, I am at the Financial T on Facebook and Twitter. That is the @ TheFinanCialt. And that's how you can reach me on Facebook, Twitter. On the gram, it is THE_FINANCIAL_T. So I'm the Financial T with the underscore between the words on the gram. And also, you can always check out my website, like I said before, thefinancialt.org, and you can get on there. There is a portion actually that talks about life insurance right on my website, if you want to learn a little bit more. And then you can also contact me right through my website. Again, that is thefinancialt.org. Also, you can buy my book there. So all this tea I'm spilling is also in my book, and it has a little bit more detail as well. So take a look at it, and I'll autograph all my books, and I will send it to you within 24 hours of payment. I can't wait to send you your copy.
And everyone, it's an excellent read, excellent, excellent. So
Yep.
definitely look up her website and order that book, because it's excellent
Yep.
information. So
Yep.
once again, Tina, thank you so much. Now, Edward, do you want to give our social media
Sure,
handles?
sure. Facebook. You can find us on Facebook at Gifted Gen LLC. And she said you can find us on the gram, Instagram, at gift.gen. YouTube, just do a search for Gifted Generations LLC. And then our website, that's who we are, Gifted Generations. It's Gifted Generations, that's with an S, dash LLC.com. We always say, what, Rob? Don't
Don't forget
forget
the
that
dash.
dash. So
Mm-hmm.
one good thing we want to tell you guys, we also have an app. We still working on iPhone. iPhone iOS is a little bit more difficult, but we do have the app called Bags of Money, and it's actually out on Android right now, and it's doing pretty good. We help improve lives by improving one's personal finance. We remove the stress to everyday financial management. By the way, y'all, that app is called what? Bags of Money app. Go and download it today, and start having a conversation and help your life improve. It's a great app. It can predict and project your checking and balance days, weeks, and months and years down the road based on your spending habits. So today is September the 28th. You want to look at November the 13th. You click on November 13th. It'll tell you, hey, based on your spending habits today's and your past weeks, you will have this much in your account on this day. Hey, when you want to know 2 months from now if you can make that trip to Vegas, you can know now based on your current standards. There it is. Bags of money. Go get it.
Well, thank you. That was a nice little commercial. So, Tina, thank you
Yes,
once
ma'am. Thank you for
again.
having me again. I appreciate it.
We
Great
truly
job. Great job.
appreciate you and appreciate the time you take out of your busy life to do this for us. So I thank you, thank you, thank you.
Absolutely.
All right. Take care.
All right, everyone, have a good night.
All right. Bye
Bye bye.
bye.
Bye. Well, thank you for tuning in to our podcast, FinanceOlogy 101. I hope you enjoyed this session and the information provided will assist you on your financial journey. Until next time, be financially engaged.